Hello traders, welcome to the MACD part 2. It's a special class, we are live. It's 7:31 p.m. EST, and as always is a pleasure to share with you some of our techniques and to share with you some of the way to use the tools. Tonight we have a special class because it's the MACD second part. We are going to check some key setups in these markets, and then we are going to have a real-time analysis just using the MACD, a top-down, on the S&P. So let's start. We have a lot to cover tonight. So we are coming here directly to the setups, and this is the first setup or the first thing that we are going to watch on the MACD, and is when the MACD is above and below the zero line. The MACD indicator has a zero line, which is right here. That's the zero line. So the first thing we need to watch is if the MACD is below the zero line. For example, in this case, we have the MACD and the signal line crossing. Tonight, I want you to start seeing the details during that crossover of zero line. For example, in this particular case, we are here in this cross. We are seeing the MACD line moving down fast, far from the signal line. So that's telling that this is a real breakout of the zero line. I'm going to show you some different cases. Right? And look how the MACD is under the zero line. So that's telling, the first thing that is telling is that we are in a bear market, that we are in a bear trend on that cycle. Let's have a look at the second cross of the zero line right here. So I want you to start seeing the difference between this cross over here, this cross to the upside on the MACD and the signal line, and the first case. On the first case, the MACD crosses the zero line without hooking, right? Without reversing. But look at this case here. It's completely different, right? The MACD crosses the zero line and immediately reverse and crosses down the signal line. So actually, that's going to be a trade. That's going to be one of the trade setups that we are going to discuss tonight. So the first step is having the MACD under the zero line. Second step, having the MACD moving back to the zero line, near, above, sometimes below. And the next step is seeing the MACD crossing under the signal line. So that's telling that we should sell. Let's see where this signal was triggered. So this signal was triggered right here on this candle. Right? So what this is telling is, let's say that we have here a wave 1 and a wave 2. What this is telling is that wave 2, it's done. Then the price continues lower, and we have the MACD accelerating to the downside, and here we have the next signal. We are going to talk about more about signals. But one of the key aspects on this part is that it's going to have more value, the MACD line crossing down when it's under zero, or what I explained just near zero, to follow the trend, let's say, rather than finding the end of the trend. As you can see, and if you check your charts and you try to use the MACD to find the end of the trend just when it crosses, it's not going to work. Because then we need to use the concept of divergence that we were seeing on the first part of the course. But look, the price moves back in to the zero line. The MACD line moves to the zero line here again, as we can see, to this area, just here to the zero line. And this time, again, we are seeing the same behavior of the previous attempt. The MACD line crosses up, the signal line fails, the MACD starts hooking down, and we have the MACD crossing the signal line and the zero line. So right there is the signal that is still bearish in the market. So that will be somewhere here in this area. We are going to talk about later how we can accelerate those signals, because clearly the MACD is a little bit lag, right? If we start seeing price action, we can say, oh, but here is a rejection. So maybe we can have a faster signal than the MACD. And the price falls anyway to the previous low that is a minimum target. And the MACD makes the move down. But look, this time is unable to make a lower low as the price. The price is making a lower low, but the MACD is not making the lower low. So that's telling this huge difference here that the market is losing momentum. And the next question is, why is losing momentum? Why is losing interest? Why is getting weaker in the leg down? Well, because if we talk about supply and demand, clearly demand is stronger than supply, even if the price makes the low, because the momentum is decreasing. So remember, when the momentum is decreasing while the price is trending, is because the opposite force is entering the market. So a lot of demand, and look at the MACD crossing the zero line right here. So now we have the MACD line crossing to the upside, the zero line. But look how different it is now. Before, on this particular case here and this particular case here, we were seeing the MACD crossing and immediately rejecting. And is that the case here? Clearly not. In this case, we have the MACD crossing the zero line, and that's why that I need you to make the exercise during the rest of this week or the month, because I want to see that you really understand how the cross should look like. So we can say that there are two types of crossing. One is where the MACD successfully crosses, and look that never looks back. Look that never the MACD tries to crosses down near the zero line, the signal line. So it's a separation between the two lines that are crossing, completely different to the previous two cases that are trend continuations. This one is clearly a reversal. So let's suppose that you went long here at this rejection or the divergence or the MACD signal, whatever. So the other way to use the MACD is that it's going to help you stay in the trade. For example, right here when it crosses, we can use it as a first profit taking, right? So that will be, on this area, will be our first profit. Right? And this is key because when we are trading, when you are day trading, when you are using the Elliott wave analysis that we provide here, sometimes we have that question, right? But where is the target? Okay, I go long here, but where is the target? Well, look, the MACD is going to start showing signals that there you can book part of the trade out, right? Look, then the MACD moves down, and then it crosses up again here. So this is a continuation signal. This is a bullish signal. So right there, some traders anticipate the cross when they see that the MACD is getting closer to the signal line. That would be a little bit aggressive, but works. Or here, we can see that the trend is building a continuation. Right there with that candle, we can see that it breaks up the resistance, it tests the resistance and continues. Till when? Here we have another cross, so we know that we have to be careful and it's already divergent. So we start being careful. The next leg, right here, the price makes this sort of bear flag. The MACD moves down, but it's above the zero line. So that's key, right? It's above the zero line. So when the MACD is above the zero line, it's telling that the market is bullish. So if we have a signal, a bullish signal right here, like this one, is going to tell you that you should go long or close any short position. So right there is the area where you know that you need to continue with the trend. Then the market makes a hard high, and we have the cross down on the MACD, so booking profits, right? Booking profits. Then we have another cross over here, and we have to start being careful because look, all the price that already the market covered. So we know that it's time for a corrective. Right? We are not going to have the same size of the trade in a trend that has been a while active, that when is here at the bottom or at the first retrace, right? So there we have the divergence. There we have the divergence here again, and we have here another divergence here. And look at the histogram is losing momentum as well. So we have to be extra careful with any bullish position at these areas. The price makes a sell-off here. It makes the rejection. Look, the MACD, how aggressively moves below the zero line. So again, is going from bullish to bearish right here. The MACD now is bearish at this area. So let's say that you are not finding or the top of the trend. Let's say that you want just to follow the trend, that you want to go with a trend following technique. So you are not going to try to sell the highs. You are not going to try to sell the divergence, let's say, right? It's another way to trade. So one setup is to wait for the MACD to cross, but to have a clean cross like this one, get far from the zero line, right? We agree that this is far from the zero line, this area here. Wait for the MACD to return up, and here will be a selling point. Right there on this area, it will be a first entry following the trend. Of course, you can start adding the wave count, right? Here we have 1, here we have 2, here we have 3, 4, 5. So you know that you need a better retrace, right? So you also need to start connecting things. You're not going to sell a wave 5. It doesn't have any sense right there. And the MACD line crosses the zero line, but look how it's crossing. And this is key about this class. I want you to see the difference between this cross and this cross. What is happening here in this second example? The MACD is turning down, right? It's having trouble. Look at all these peaks, all these attempts. And finally, when it crosses down, the signal line that will be here is telling a short trade. It's telling a short trade. And look at the result. And here we are technical. We are doing momentum trading with just technical trading. Look, the price makes that leg down, and here it crosses up. So it's a signal not to buy. It's a signal to book profits. It's a signal to be extra careful because the price could reverse. Actually, the price starts reversing, so you may be thinking, oh, this is a wave 3. and this is a wave 4, right? I'm sure I'll be thinking on that at that place. But let's see if the MACD shows us a sell signal. Well, here gets closer to the 0 line, as we can see, but the signal line didn't cross down, the MACD line didn't cross down the signal line. We didn't have a sell signal. Instead, the MACD crosses the 0 line, the signal line as well, and gets far from the 0 line. So if we are thinking now that this is wave 4, we have to be extra careful because now the MACD is too far from the 0 line. So first conclusion here, first thing to watch, when the MACD line is too far from the 0 line, it is not likely to be corrective, the wave that we are seeing. When the MACD line is too far from the 0 line, it is not likely to be corrective. When the MACD line is close to the 0 line, can be above, can be below, like in this example, and we see corrective behavior on price, like in this case, we wait for the signal near the 0 line, and that's our selling point, right? So extremely, extremely objective, the way to read the MACD. Let's continue with the next example. So, for example, here we have the euro. This is an hourly chart. And look here, the MACD crosses up, okay, gets apart, gets far from the 0 line. So we know that this leg is not likely to be corrective. The price moves down, and the MACD comes near the 0 line, crosses and rejects, and right there shows a signal to go long. Right there, because it's telling that this one is corrective. Because the MACD is above 0, far from 0. Be careful, don't try to do things when it's too close to the 0 line. Then we have a nice leg up. The MACD crosses down, so it's time to book profits. The MACD comes down here and rejects, showing a bull signal from this area. Then moves a little bit higher, right? Makes the high right there. It's extremely divergent when the price makes the high, so we know that a lot of supply is pushing the price down. We have the MACD crossing under the 0 line. We have this corrective. The MACD moves up, rejects, closing below the 0 line, the signal line better here, and that's the continuation signal. Sometimes the MACD is going to be extremely lag, so we can use it as a confirmation that we are in a short trade and we will have a better confirmation. Some other times, it's going to show great setups. So this is another example. Look at this beautiful example on Apple. We have the MACD line strongly crossing fast the 0 line right here. So that's a fact. We have our MACD line crossing down strongly. After that, here we have the retrace, and look that this is fantastic because it helps us to find the trend continuations. Sometimes it's hard, right? If let's say if this is wave 1 or A, and if this is B or 2, it's hard to tell where that thing is over. We don't know if it's going to retrace 90% or 70% or what, right? It's hard. But look at this beauty. We have the MACD crossing. This is the sell signal on the MACD. So signals on the MACD, the crossover signals, are better when we follow the trend. So all these are sell trades, right? Because we have the MACD crossing down and is under the 0 line. So remember, when the MACD is under the 0 line and we have sell signals, those are better than when we try to fade the end of the trend. Of course, once we have divergence, like in this case, and we have the trend that has been already moving in one direction, we have to start thinking, okay, divergence means that an opposite force, in this particular case would be demand, is pushing the market to the other side. And of course, then we can add a price action validation tools, we can add other things. So look, we have here the MACD crossing up, so it's bullish now. Let's say that we were thinking that this was a wave 3 and that this was a wave 4, let's say. We are not going to sell it, because the MACD never crosses down. So it's absolutely bullish, bullish, bullish. Here, it starts showing divergence. So we have to be careful. When it's divergent, we have to be careful. It crosses down strongly, moves up, gets near the 0 line, but fails to get to the 0 line, crosses down, and that's another sell signal. So that's the setup. So to recap, when the MACD line, that is the blue line here, is under the 0 line, the market is bearish. When the MACD line is under the 0 line, we should just look for sell trades when we have the cross down of the MACD crossing down the signal line. The opposite is true when the MACD line is above the 0 line. Here is another technique. There is something called the climax. The climax is when you have, let's say that you're thinking that you're in an impulse, wave 1, wave 2, wave 3, you're happy with that. You have here wave 4, and you're looking for wave 5. Great. And we know that wave 5 is likely to lose momentum, to have divergence. But let's imagine that during that process, you have a move up, something like this, huge. And that's a problem because you're going to say, okay, it's not an impulse because the impulse should be losing momentum. It's not likely to be the wave 3 because the trend has been already active for a while. So those climax, like in this case in gold, are telling that, first of all, it's a corrective wave. You need to label as a corrective, not as an impulse. That doesn't have any sense. But if you connect some MACD line points, like this one with this one and this one, and you see the MACD far from the others, this is extremely bearish. But remember, only when it happens in a trend that has been active for a while. Of course, if this strong move happens in the middle, it's a wave 3. But if it happens at the end, it's a corrective wave. So it's hard to go against fast moves. Right? It's hard to find the end of those legs. It's hard. But you can make the exercise with this setup, and you will see that there are a lot of cases where you have these huge MACD compared to the others at a trend that has been running for a while, and usually that's the end of the trend. The next setup is the speeding up the signals. So to speed the signals, to have a faster signal, we can use a faster MACD. So in this case, the standard MACD is 12.26.9, right? That's the standard MACD. But if we want to have faster signals, we can go with a faster MACD. So this is just an example. You can play around with the numbers, but I picked this Fibonacci MACD. Fibonacci because I have 5.8, 5.8, and you can go with 13 if you like as well in the signal line. It will be fine, but 5 and 8. So you can see the difference between the 12.26 and the 5 and 8. Could be any number lower than 12.26. You can play around with numbers. And of course, it's going to accelerate signals. So for example, if the 12.26 MACD is above the zero line, like here, like here, like here, like here, and you know that the market is bullish, and let's say that you think this is wave 3, and this is wave 4, or this is wave 4. When you are in the live market, you don't know when wave 4 is going to be done, when it's going to finish, when you can buy wave 4. One of the issues of the MACD is that shows signals a little bit late. For example, in this case, the signal to go long was just here. But if we are using as a foundation the 12.26, let's see how fast the 5.8 gives us the signal. So the 5.8 gives us the signal right here. As we can see, the MACD line crosses under the zero line, not too far, rejects and gives the signal right here. So we can see how using a faster MACD, in this case, we can have a faster signal. But remember that when you are using a faster MACD, is to use it combined with the longer term or slower MACD. Because if you use the 5 and 8 alone, it's going to show so many noise that you're going to have a lot of bad trades. But in this particular case, when you want to accelerate the entry, you can use it. And it's going to help you a lot. Here we have another example. So in this particular case, we are seeing, for example, the MACD, the slower MACD here below the zero line. So we are looking for, let's say this is wave 1 and this is wave 2, any wave count, and we are finding the end of 2. And we don't have an idea if wave 2 is going to be deep, if it's going to be shallow, whatever, right? So the MACD line signals the short trade right here. But if we want to accelerate the entry, we can use the 5 and 8, for example, and when it crosses was here. So look at the huge advantage that we have using a faster MACD. But don't forget that what we are trying to do with the faster MACD is anticipating the signals on the 12.26. So of course, this is going to give us a little bit of an edge, but we have to be careful with the noise. All right, so this technique is the one that we were talking before of the climax. So when we have a huge MACD, something that you haven't seen before, you have to be careful because most of the times it's not a continuation. Most of the times is the end of the trend. So in this case, we have that plus divergence. So don't forget that we can connect highs of the MACDs, of the previous MACDs, like in this case, this MACD with this MACD. And when it's too high, we have to be careful. Look, we have a divergence here, and that was signaling the top of this leg on the S&P. So the other setup that we already talked about a little here in the class is the failed crossing the zero line. So we can say that we have two types of crossing the zero line. One is this one, when we have the MACD line and the signal line crossing to the other side easily, fast, with a good separation between the two lines. There are other cases, like for example here, that you can see that the MACD line crosses and then rejects, tries again and rejects, right? So when we have this example of MACD line crossing and slowing down, we can see the difference. Notice the difference. Crosses down, but immediately starts turning, immediately starts making this hook. So you are going to see the price losing momentum even before the cross. And there we have the cross. Was on this green candle, was at the rejection. So look at that perfection. We have the MACD crossing up, and we have the candle, the demand candle showing up there. The MACD line departs the signal line as well, and here says, hey trader, be careful, start booking your profits. Then, and then it crosses up again, showing a continuation. The price makes the high, but now it's divergent. So we have to be even more careful. This is momentum trading, right? Momentum trading. All right, there is another technique that I want to share with you tonight. And of course, in the membership, we are going to keep working on the MACD with the live market analysis that we perform every day. But there is another technique, and is adding the trend line. So if the price is moving down, you need to add a trend line on the upper side of the MACD. So look for potential pivots on the MACD. So that's easy, right? Here, for example, we have a nice pivot. This is the Nasdaq. And here we have another pivot. So we connect the 2 points to create the line, the trend line on the MACD. When the MACD line crosses up, it's a bullish signal. So remember, price going down, we draw the line on the upper side of the MACD. When it crosses, it's a bullish signal. Of course, then after that cross, we can wait for the corrective. Let's say this is wave 1 here, wave one and wave 2, or wave A and B, whatever. And when it signals again the end of 2, or we can accelerate with the faster MACD, we can trigger the trade. Here is another example. So the price is going down. We are finding the end of the leg down. Let's say that we have a wave count where this is A and this is B, or 1 and 2, whatever, any wave count that we are having. And we are wondering where, how the wave B is going to be done. When wave B is going to be done. That's the question in order to trigger the trade. So let's make the whole exercise. MACD crosses down. Is this a buy trade? No, it's a short setup. It's a short trade, whatever. It's a short signal. Okay, price moves up. Great. MACD line comes to the 0 line right here. Crosses down. Is a buy trade? No. Right? It's not a buy trade. It's a short signal. So the price moves down. Okay, great. Here, do we have divergence between the MACD line? No. Actually, this MACD line is lower than the previous one. Right here is lower. So we don't have divergence. And we should look to trade with divergence. The MACD line returns to the 0 line. Is crossing strongly? No, right? Rejects and moves down. Crosses down. It's a sell signal on the MACD. The price makes the low. Once we reach the low, question. Do we have divergence here? Yes, we have divergence. We have a rejection. Plus, we can add an additional trend line on the upper side of the MACD. So from here to here, connecting these 2 pivots on the MACD. And right here, it crosses. So you can use this as an additional validation. So right there is telling that this is bullish. Make sense? And from there, the MACD departs strongly to the upside. So it's bullish now, the market. Tries to move down, rejects. 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 So look, all these are continuations. All these are buying signals, buying signals, buying signals. Because the MACD couldn't break down strongly. Make sense? Yes, of course that makes sense. It's actually extremely, extremely objective. This is one way of using indicators to find the end of the waves, to combine with the Elliott wave theory, right? So I think it's a great example, this case, and we're going to do the live market analysis in a second in the S&P to get to a setup, but clearly the MACD is going to help us a lot. So there is more. Let's continue. There are more setups. So look at this one. So have an open mind, because look, here we can connect these points. Here on the MACD, we can connect this one with here as well. And when it crosses, right here, the price is moving down, so we draw the line above the MACD. If the price is moving up, we draw the line below the MACD. We have divergence. Look here, divergence and divergence. But the MACD crosses up right here, and that's the buy signal. Or we can wait for this signal to go long, or for this signal to go long, because right here on this area, now the MACD is above the 0 line and it's just showing the bullish signals. So that one is really good as well. Look at this one on the Bitcoin. So the same story. Now the Bitcoin is moving up here, right? It's a 15-minute chart. This work on any time frame. We connect the MACD here, this pivot, with this pivot. When I say MACD, is the blue line, right? So we connect the MACD line, and right here is where it shows the sell signal, right there, because it crosses down the MACD trend line. So right there is a confirmation. Of course, you combine with Elliott wave, and you can say, oh, this is wave 1 right here. I'm looking for the end of 2. The MACD is showing exactly where wave 2 is finishing. I can add here some rejection points, and I can add price action also to validate what I'm seeing, or I can just trigger the MACD signal because it crosses down the trend line. And from this area, I can sell it. I can leave a protective stop loss above this high and then wait. And look, the market moves nicely all the way down for a beautiful day trade. All right, so here is another key aspect that I want to share with you, and is when we have the wave on the MACD. In this case, let's say this is wave A. Let's say that this is wave B, and let's say that this is wave C. If we label those waves in the MACD, this will be the wave A, this will be the wave B, and this will be the wave C, right? So this technique, this is just an example, but in the membership, and later we're going to see better examples, but this one is nice because it's big enough so you can see it. So look at the B MACD. What if we trace a line where the B MACD finished? So right here I can trace a line. Question, when the MACD cross it up the MACD for B after C. So again, I'm going to draw a line. This is going to be just a horizontal line where I have the MACD peak during my corrective wave. When, after that, after drawing the line, when my MACD line crosses up the green line, right here, right? So that's telling that C, it's done. Right here is the signal. Right there is the bullish signal. We have also divergence here, right? But then the price moved lower, so hard to find the end of the leg with a divergence, let's say. But this is more objective, right? This is clearly more objective. Also, I can draw the trend line, and also I have a signal to go long right here. So you're going to start putting all together as the example that we are going to make on the S&P in a second. So this is the next setup. I know it's a lot of things. It's a lot of things. So that's why I'm going to do a third part next month on the MACD, because there is more. As you can see, the MACD has so many things. But let's stop there with the setups, and let's make some exercises. Of course, during the membership, during the daily live market analysis, we are going to keep signaling setups. We're going to keep refreshing these setups on the MACD. So let me bring my chart. Here is the chart. And now let's go into the live markets. So you're going to start seeing now all the signals. Here I'm using a regular MACD, 12, 26, 9. Nothing special. And let me ask you something. When the bullish trend started, here, right? There, the last bullish trend started there. When the bullish trend finished and started the bear trend, here. So remember, MACD above the zero line, market is bullish. MACD below the zero line, market is bearish. Next question, is currently the market bullish or bearish? Bearish, because the MACD is below the zero line. Great. Another question, is this a bullish or a bearish setup? It's a bearish setup. Because, look, first of all, MACD line, it's below the zero line and actually is far from the zero line. Then MACD line moves up. Okay, price 2. Okay, good for the price. Then the MACD is having trouble. As you can see, it's starting to hook it down, and that's another key aspect that I want you to start seeing. Look, the MACD is starting to reverse, right? This is starting to draw a cap here. So the MACD line crosses down, signaling that we are going to continue lower. So as we can see from there, yeah, that's true, the price continues down. Now, we have divergence on the MACD. That's true, something that we didn't have before. Next question, is the live MACD turning up? No, we don't have that hook. The MACD is strongly to the downside. It's extremely bearish. So you have to be careful, because this divergence is nothing until it reverses and maybe shows the signal. But this is also telling that on the lower time frames, we should follow the sell trade, the bear trend. So let's continue to the lower time frames. Let's move to daily chart. Great. So here we have the MACD crossing the zero line right here. That's something extremely objective, because sometimes Elliott wave can be frustrating because you are looking for something special, like for something specific. You are looking for something precise, and it can end in a lot of frustration because it's a subjective analysis. It's part of the nature of the Elliott wave theory. But this, like complementing, like adding better this type of indicator to the Elliott wave analysis is fantastic, because you can have also an objective point of view. So the MACD crosses down right there, so it's short. It's in a sell setup. Right? It's telling that from there is to sell. You shouldn't be buying. So you can see that these guys that they started buying here, the S&P, they were wrong, because the MACD was under the zero line on the daily chart. So clearly a huge mistake. Then the price, and never the MACD crosses up. That's another key aspect, right? Because that would be bullish in that case. If we have the MACD crossing up here, that would be bullish because we are near the zero line. Okay. The MACD gets apart from the zero line, so we know that the price is extremely extended. Moves up and creates the MACD crossing the signal line. Okay, fine. It's not divergent, nothing. But then immediately reverse and moves down, crossing to the downside again. So this is extremely bearish. This is extremely bearish. The price continues lower and didn't make a lower low. It's a matter of time to have the lower low. And we will see if we're going to be divergent or not. Because if the price reverse and the MACD starts jumping, we could have a bottom. But we can accelerate the entry also by moving to lower time frames. Look. So on the 4-hour chart, we have a bear market. Look, here the MACD crosses up, gets to a point that rejects. So this is extremely bearish because on the daily chart, the MACD is below the zero line and everything that we just talked about. So clearly this is bearish. Crosses down, and on the 4-hour chart is bearish. Gets apart from the zero line, crosses up, but look how it's crossing. It's a matter of time to see the MACD line crossing to the downside. Let's have a look at the hourly chart. So we have the MACD line under the zero line. The MACD line moves back to the zero line. The MACD line crosses down the signal and the zero line right there. Is that a bear signal? Yes. It's a short signal right there. So currently, it's short on the hourly chart. Of course, we have to start being careful because look at the previous high. Has been a while. Right? For example, look at this beautiful signal here. The MACD crosses down, is bearish, moves up, rejects, and right there is happening the first signal. So of course, when you are at the beginning of the trend, the signal is going to be better than when you are almost at the end of the trend. Make sense? So don't forget that Elliott wave cycles are going to be 1, 2, 3, 4, 5. When you are trading on 2, you have a better chance of capturing a nice leg down that is called wave 3. When you are finding the end of 4, when you are trading near the lows, you have lower chance of having a big sell-off because it's wave 5. So you have to be more careful. Make sense? Trades during the beginning, near the beginning of the cycle, always are going to be better. And that's something that we talk about in the volume profile course as well. We sell at the highs, we buy at the lows. But because this is a MACD course, this is a sell signal in terms of MACD. Because the MACD comes back to the zero line, rejects, and is not crossing like here, for example. You can start seeing the difference. I believe that in order to master this indicator, that's the first step. Check in your chart how the MACD cross the zero line. This is extremely important to understand. Let's continue to the 15-minute chart. Well, here a lot of noise, but let's move a little bit to the left so we can see better the setups. So look, the MACD under the zero line, all these under the zero line. Right here, it shows a sell signal. Let's see if it was good or not. Nope, was not good, right? Was at the end of the trend. Okay, so let's say that we take it because we are just taking all the MACD signals. Of course, we need to add something else. Of course, here you are selling at the low of the market, so it doesn't have any sense. Remember that when the market is moving down and you want to sell it, you look for a corrective wave, right? So you need to start putting all together. Look, here we have a nice A, B, C. In this case, we have the MACD crossing up. Maybe here was a fake signal. Sometimes we're going to have trades that don't work. So maybe we sell there, let's say, and didn't work. But the price moves up, rejects. This is other thing that we have been talking in the membership, right? ABC, rejection. Look at the MACD right here crossing, showing the signal. Oh, but I want something faster. Well, at the MACD trend line from here to here. And you're going to have, well, almost the same signal in this case. The other one that we were talking, the MACD crossing this previous point, here is another signal. That one is a little bit too late, right? So for example, we are day trading, so of course the plan is just to get to the previous low. Right there, the market is divergent. We need to start being careful because now here we have divergence, right? The price moves up, the MACD moves up, but fails to cross nicely to the upside. So it continues lower, but trading here is more risky because the divergence, the before divergence trade is already there, right? Then we have all this horrible price action for the rest of the session. So horrible, completely sideways. So nothing interesting there. And of course, at this time, we usually we don't have anything else. And of course, you can continue and you can go up to the 1 minute chart and check all the price inside. So traders, this is important because it's a way to find trades using the MACD in an objective way. As everything in technical analysis, the technique is not perfect. Sometimes it's going to provide horrible signals. Sometimes it's going to provide dream signals. And the most important part is to link the MACD signals with the price action, with the wave count. So from now on, we are going to work in the membership, in some cases, with the MACD, where I'm going to signal where we are going to have the validation during the session. But we needed to have this class before, this training, because I can't explain these setups every day, right? So that's why I wanted to add this special session in the Members Academy. So from tomorrow on, we can start working on real market examples using these techniques. But in order to understand them clearly, you need to watch this lesson several times because there is a lot of information here. And there are other setups and other key things that we are going to add on next class that is going to be on the month of November. During this month, I want you to master the MACD part 1 and part 2 and become a MACD expert. And you may be wondering, okay, but why the MACD? Why you are not using an awesome oscillator? Why not a stochastic? Why not the RSI? Well, the answer is that all these indicators are providing exactly the same, just that the MACD has a signal line, and that's one of the benefits. But if we add the awesome oscillator, let me show you, because this is not something different to other indicators. Look, if we're looking for divergence between these two lows, we have exactly the same divergence on the awesome oscillator, right? It's exactly the same. But what I believe brings the analysis to another level is that the MACD line and the signal line are crossing each other. So they are providing an additional layer of information. Plus, on the awesome oscillator, we are not having the MACD line crossing the zero line. So of course, the awesome oscillator, for example, is a great tool. It's a fantastic tool. I have been using the awesome oscillator as well for years. But as you can see, it's providing the same thing as the MACD, but the MACD is providing a little bit more. But at the end, the oscillators, the RSI, the stochastics, the MACD, any oscillator that you like, at the end is going to provide the same information. But you should master the one that you like more. You should read all these details. And I believe that the MACD provides a lot. Of course, the MACD itself is not going to be a whole system, but combined with the Elliott wave count and combined with the price action, we can come with some really good trades in the membership that you can follow during the session, that we can find swing trades as well, that we can do a lot of things with the MACD. So from now on, we're going to start using more often the MACD in the membership. Before I was like more cautious because I didn't explain all these setups before, so it would be extremely confusing in the membership if I start adding lines here and drawing things in the MACD. You will be like, what is that? But now that you have the training, it's going to be easier to follow the system. All right, traders. So this is very exciting. I think that's it. That's it for today. I'm going to post the recording shortly in the website. So please have a fantastic rest of your day. Good evening. I'll see you tomorrow with fresh wave counts and fresh trading ideas. Thank you very much. Bye-bye.